Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and why gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. The first one is I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open create an opportunity. And the opportunity for traders is when they can identify a specific price level where these stocks will first be drawn to like a magnet and secondly have a price reaction from in the other direction. Now in the course, they learn exactly how to do this. They learn the criteria we're looking for with the stocks. They learn how to calculate these specific price levels. And of course, they learn how to trade them accordingly. Everything traders need to know how to do this is found in the course at Lazy Gap Trader. The second part of the course are the gap fill trades. This is where stocks that do gap higher or lower at the open, they leave what's called an open gap. At some point in the future, sometimes it's the same day, and sometimes it's days, weeks, or even months later, those open gaps will be filled. That creates another trading opportunity. Traders learn how to track them, and traders learn how to trade them. Not all trades are created equal, so it's very important how a stock comes in to fill a gap on whether or not it's a viable trading opportunity. The other thing I do is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that went out this morning. As you can see, it arrived at 8:55 a.m. Eastern Standard Time. Now, we had 5 potential morning gap trades on the board today. With that said, we're only interested in taking the trades that hit the specific price levels that we calculate. These are the highest probability trades on the board. If a stock does not hit the specific price level that we want, it's off the board, it's a no trade. Traders that are very selective with their trades and let the price come to them, those are the traders that are the most successful. Those are the traders that make the most money in the market. With that said, out of this list, we had a couple that came close but didn't hit the specific price levels. For example, Michael Kors, it gapped higher and it missed our level by about 25 cents and it collapsed after that. It was a short trade, meaning it was gapping higher. That's okay. We missed the trade. It doesn't matter. But what we did get was a nice, easy, painless, and stress-free trade with Supernus Pharma, SUPN. I say gap lower. Support levels are $41.85, and I gave 2 secondary levels, one at $39.69 and $37.52 if the stock were to trade lower. All 3 levels are viable trading opportunities. All 3 levels would produce a price reaction in the other direction. Stop and profit target is about 30 to 55 cents. These are minimum profit targets. We're going to take a look at the chart of Supernus in a moment. Also, what I do is I give a laundry list of gap fill trade opportunities. And this morning, we had 2 trades hit the specific price level we were looking at. The first one is GoDaddy, GDDY, and the second one was NTAP, NTAP. With GoDaddy, you can see here that the gap fill level, which is the third column over from the left, is $44.69. It's listed as a short trade, meaning once the stock hits that level, we're interested to sell the stock short, looking for a pullback from that level of $44.69. The second one was NTAP, and you can see where the gap fill level is listed at $42 even. It's also a short trade, so we're looking for the stock to hit that level, short the stock, looking for a pullback away from that level. Remember, these are all stocks that at one point or another were morning gap trades. So with the gap fill trades, we get another bite at the apple. We're in the opportunity business. We're looking for opportunity each and every day, and I'm handing my traders opportunity on a silver platter in 2 ways. Number 1, they learn how to do both these strategies in the course at Lazy Gap Trader. And number two, those that want my list of trades each and every day can get them, and they arrive 30 minutes before the market's even opened for business. Let's go ahead and take a look at some charts. The first one we'll look at is SUPN. This is a 1-minute chart because I want to show you the magnitude of A, what happened, and B, how fast it happened. Now it's hard to see, but on the top left of the screen, you can see where the stock closed yesterday at $49.65. We identified a level 15% lower where the stock would have a price reaction in the other direction. This was the high probability trade. This was a level that we had a very, very high probability chance of having the stock bounce higher or have a price reaction in the other direction. And you can see here what happened. As soon as the stock came into that 41.85 level, it made a low just a few pennies below that at 41.70, well within the stop loss limitation. And then look what happened. Just a few minutes later, the stock was at a high of $43.10, representing a bounce higher of $1.25 in just a matter of a few minutes of trading. It basically took about 5 minutes, stress-free, and a very easy trade at that. This is a price level that anybody that's taken my course would be able to calculate for themselves in a matter of minutes before the market even opened for business. Here's one of the gap fill trades, NetApp, NTAP. You can see what happened. The stock was gapping higher at the open and it came right into our level at $42 a share. Made a high of $42.13, just a few pennies above the level, well within the stop loss limitation. And look at this. Just a few minutes later, the stock was at a low of $41.30, representing a pullback from that level of 70 cents in just a matter of minutes. Now the stock is trading higher, but we don't care. The trade is over. These are scalp trades. These are day trades. We want to make our money, get in and get out. This one was right off the gap fill list, given out to members 30 minutes before the market even opened. The next one we'll look at is GoDaddy. The level we identified off the gap fill list was $44.69. The stock traded up to that level. It did have an immediate pullback from that level, but it only pulled back down to a low of $44.51. That's not really enough. That's not what we were looking for. Now the stock's trading over that level just by a few pennies. So it may or may not work out, but traders certainly have an opportunity to either get out at break even, a few pennies above the level, or wait for it to work out throughout the trading session. It's still well within our stop loss limitation and only trading 3 pennies above the level as I make this video. Traders, we do this each and every day. This is a strategy that you can learn for yourself and use for the rest of your trading career. If you want to learn everything you need to know in order to trade the gaps successfully, then come over to lazygaptrader.com and learn everything you need to know in order to trade the gaps each and every day. It's real opportunity right in front of us every single trading day. I'm David Frost. Thanks for tuning in, folks.